Hi everyone, Sarah Rentschler here from the itemized Colorado office. As the 2022 tax season is mostly over, barring some extensions, we're halfway through 2023, and the upcoming tax season will be here before we know it. Jay and I thought we would send out a short video to you all to answer some of the most frequently asked tax questions that we've received from you folks throughout the years. While we've worked with some of you for many years, and others most recently, we value your business and your trust in our tax expertise. The most frequently asked tax questions that we get from clients are, what's the difference between a credit and a deduction, to itemize or not, how long to keep tax returns, and what do I need to keep track of during the year? Credit versus deduction. A deduction reduces your taxable income. A credit reduces your tax bill dollar for dollar. For example, energy credits, child tax credit, foreign tax credit, etc. This will make more sense if we briefly walk through an example. First, we have our income. Then we deduct the larger of the standard amount or itemized deductions. This equals our taxable income, and thus the tax we owe to Uncle Sam. Subtract credits, estimated payments, and withholdings to come to, drum roll, the amount refunded or owed. As you can see, both credits and deductions lower your tax bill, but in different ways. Itemized versus standard deduction. The choice comes down to whichever is bigger. Standard deductions for 2023 are, for single filers, $13,850. Married filing jointly is $27,700. You'll receive an additional $1,500 if you are 65 or over, meaning if you're married and both you and your spouse are over 65, your standard deduction for 2023 is $30,700. We then compare the standard deduction to itemized deductions to see whichever is bigger. Common itemized deductions include medical or dental expenses that exceeds 7.5% of your adjusted gross income, interest paid on home mortgages, state and local taxes. The maximum we can use is $10,000. And finally, charitable contributions to qualified organizations. Be sure to get a receipt letter from the organization. If the total of itemized deductions exceeds the standard deduction, itemizing will result in a lower taxable income, thus reducing the amount you owe to Uncle Sam. Third question we get, how long to keep tax returns? Although the IRS recommends keeping the past 7 years of returns, we err on the side of caution, and we recommend keeping all your tax returns. If at any time you're in need of your return or any of the information in it, having it on hand is better than requesting a copy from the IRS. Also, the IRS will provide a transcript of your return if the return is older than 7 years. This is a watered down version of your return. Having the full return on hand is the best option. The good news is that you can destroy tax return supporting documents 7 years and older. These are usually what take up the most room anyway. What to keep during the tax year? One of the most frequently asked questions we get is, do I need to keep track of my itemized deductions during the year? The Tax Cuts and Jobs Act, signed into law in 2017, nearly doubled the standard deduction. We now see most clients taking the standard. With that being said, we suggest keeping track of the itemized deductions for the year. We'll add up your itemized deductions to compare them with the standard to determine the larger of the two. Now, the biggest issue that we see with tax documents is them missing due to being delivered electronically. Ensure that you have your tax documents set to be delivered via mail to ensure that you have what you need when tax time rolls around. W-2s, 1099s, health insurance, and investment tax forms should all be mailed. If you have your investments with us here at TimeWise, we have your tax forms on hand. Keep a file handy throughout the year, used exclusively for tax documents. Also, keep a notepad in there. That way, if you have questions or items you think of throughout the year that you'd like to cover during tax season, you can quickly jot them down and keep them all in one spot. I hope this video was helpful. As always, please reach out with any questions throughout the year. Jay in our Atlanta office and I in our Colorado office will be happy to answer any tax questions that you may have. Thank you.